everyone. Dave Barlow here with Sell for 1% Realtors, and I feel like I'm at Cedar Point and on a roller coaster, Rich. It's up, it's down, it's all around.
Dave, we do our best to keep it exciting for you.
I get it. Every morning it's like a surprise. What are you guys in the mortgage industry going to do to us today?
It's well, I'll deflect that and say that it's our friends in Washington that are doing it, not us. But
I understand. I agree with you 100%. I used to tell people, you go to a social gathering, they find out I'm in real estate, and well, how's the market, and is it going to continue to be this great? And my standard answer became, as long as those ding-dongs in Washington didn't do something stupid. And of course, those ding-dongs in Washington did something stupid, and we were up above 7% back in November. Last week we were kind of teetering back and forth between low 6, high 5.
Right.
But we got a little excitement in the market this morning, didn't we?
Yeah, it's actually over the last week or so we've had a series of numbers that have all led to the perception that rates will continue to edge up and that the Federal Reserve will continue to raise rates throughout 2023. We got a very high employment number back at the beginning of the month, which over 500,000 new jobs created. The CPI number was very high. The PPI number this morning was high, and the retail sales number was also high. So we've had a series of numbers that have all, as I've said in prior conversations, it's the perception of what is going to happen next. And because of these hot numbers, the perception now is that the Fed will continue to raise rates. And so that's leading to, unfortunately, higher mortgage rates. I hate to be the bearer of bad news, but we're in the 6.5 to 6.75% range, depending on your credit and your down payment and all that.
So we got a 0.5 point jump in about a week because of all these numbers coming down the pipe.
If you can believe that. I mean, and it's a very difficult thing about my job is that, I've always got to be, aware that what I'm discussing with somebody is constantly changing.
Right.
So it's a big challenge. It really is.
Yeah, it's crazy because a lot of what you talk about is what's already baked into the cake, what's going to happen in the future. And it looked like, at the last Fed meeting, they only raised rates 0.25 basis points, and that, well, maybe things are kind of slowing down and so on and so forth. But these numbers that have come out here in the last week are indicating that there's a lot more inflation to come. And therefore, what we have baked in the cake for the next Fed meeting, which is probably 0.25 basis points, may not be accurate.
It could be a 0.5 or 0.75, and more importantly, the language coming out of that meeting probably will be indicative of the fact that they don't see a need to curtail the rate increases at any time in the near future. Now, I will say this, Dave. And I'm not smart enough to really understand this, but there are some anomalies to these numbers that have come out that I've read some articles that seem to indicate that the way that they're, statistics can always lie, and the way that they're calculating these numbers has changed in 2023. The jobs number possibly was something that they carried over, that was just an allowance that they had for so many seasonal jobs that possibly will not continue into the coming months. So there is some hope on the horizon that some of these numbers may be a little bit overstated and possibly could come down. I read an article about the PPI number this morning, and they were stating that the way that they're calculating prices on goods and what types of products they're throwing into the PPI number have changed for 2023. So in other words, maybe in 2022, they were saying, what are the price of eggs? And now they're saying in 2023, what is the price of milk, or what is the price of automobiles? And they're discounting other products. So things like this are changing those statistics and could come to level out. That's the one hope we have, is that this will not continue.
So are you saying that our government is changing the definitions?
They're changing the
inflation.
Correct. They are changing the way that they. Again, I'm not smart enough to really get into a detailed conversation.
I think we're all smart enough.
But they are changing the way that they that they present this number and what factors go into these numbers. Yes.
Yep, I understand. Yeah, I think everybody was in agreement that the 500,000 jobs in January was not an accurate number. And what you're saying,
it didn't pass the eye test. Yeah.
Yeah. I mean, if it had been up, from the projected 200 and something thousand, maybe to 300,000, yeah, that's good. But when it doubles, yeah, there's outside influence happening somewhere. And like what you said about carryover from the previous year makes sense to me, that, it just, well, throw the number in. And, it is what it is. But bottom line is, we know for a fact that as of February 16th, that interest rates this morning are around 6.5%.
Yes.
And so
6.5 to 6.75.
So, all right. Well, as the old saying goes, we've seen this movie before. We'll work our way through it. We're fortunate here in Columbus that, there's 40 to 50,000 people moving into the city every year. And that's not including what's happening out with Intel. Homes are still selling. We're starting to see, I've had a couple of listings here recently where we've had, a couple people in a small bidding war. And I think as we move into the spring market, that we'll see a little bit more of that as more buyers come into the market. There are fewer homes on the market. We've lost nearly a third of our listing inventory since November. Wow. We're around 3,400 active listings in Columbus in November. We're less than 2,000 active listings as of this morning.
So I didn't realize that.
Yeah, that's 1,400 active listings. And I think what's happening, in my own humble opinion, is that sellers are like, well, why would I sell when I got a 3% interest rate and go buy something at a 6.5% interest rate? And I think we're going to see a little bit of a strangle on listings, and not because we have so many buyers that they're just buying up the inventory as fast as it comes on the market. I think that sellers are just sitting tight. And so we need, Rich, for you to make a phone call down to Washington, raise a little concern with those boys and girls, and let them know that we need to get these interest rates back down into the 5s.
Dave, I'm on it. I'll get on the bat phone and do that right away.
I appreciate that, Rich. Thanks for joining us here this morning.
Thank you. Thank you, Dave. Thanks for having me.
Yes, sir.
Bye-bye.
Thank you. Bye.